Hello traders, Jason here with SwingHigh.com. It is Thursday, January 28th, 2010, and because the markets aren't closed yet, I'm just going to call this a halftime report. It's about 1:30 right now. I have a very busy afternoon ahead of me, so I won't be able to give you your post-market analysis today, but I'm going to tell you what I'm seeing in the markets right now. From strongest to weakest, we have the sectors that I'm following for Swing High right here. The financials are only down 0.07%, while the S&P is down almost a full percent, the Dow almost a full percent, the Russell's 1.6%, and the Nasdaq 2.5% down. Wow. So some real relative weakness in the Nasdaq and the Russells. The financials are showing strength today. That's probably because of earnings, but the Russells and Nasdaq are going to be our leaders to the downside for today. So here's what we have. We had a small gap up this morning, about 0.5%, and then pulled back right before the close, or open, I'm sorry. This is the 15-minute chart of SPY, the S&P 500 tracking ETF, and basically we shot down at the close. We opened above 110, which was major resistance, and should have been support, but we shattered right through it, found some support here at the 200 period moving average for the 15-minute chart, held up a bit, and then broke down again, came down to 109, which we expected to be support, and it acted perfectly as support as we hit it and bounced, and then hit it and bounced, and then hit it and bounced, and then that was enough for a bear pullback or a bear flag, and then from there, we broke down, found support again. It looked like we were going to shatter it, but eventually that test right there was enough to break the support, and we did break it hard. From there, we came down to finally test 108, which is good to see for the bears, not so good for the bulls, and we actually broke below it, but it did act as support as expected. So after testing that 108 mark, we consolidated sideways, made a descending triangle or a low base right here, but we're unable to break down below 108 again. So if you draw a rough trend line here, you can see that when we were unable to break down, instead we broke up. So that's a decent reversal pattern there. I'm going to call this the beginning of a cup and handle formation. We'd have to see a slight pullback again, probably after hitting support or resistance here at 109. We're going to see a pullback, hopefully to around 108.60, and then that would be a good cup and handle formation confirmed on a break above wherever this swing high is. So that could be bullish going into the close, but do expect resistance at 109 here. If we can't break above 109, that's going to be good for the bears. If we do put in a cup and handle here and break back above 109, that'll be better for the bulls, but we still have 110 to fight through on the way up. So that's the analysis of what I'm seeing right now and my prediction going into the close. On the daily chart of SPY, we do have the beginnings of a bearish engulfing pattern. As you can see, the real body of this candle is completely consuming, if you will, the real body of the last candle. So that's a bearish engulfing. Those are bearish. If we break below 108, or if we stay below 109, that'll be a very bearish signal after a low base formation. I'd like to see us consolidate more going into tomorrow, though. I would like to see a close above 109, actually, and then another blip sideways to give us a nice strong low base formation for the week. However, I would not be disappointed as a bear right now with a breakdown below 108. Let's take a look at the market internals. The trend, I got to get off that. The trend has been bullish most of the day with a very big bearish spike. The tick has been bearish most of the day with a bullish spike recently, and the VIX was up as much as 6%, 7% today, and is pulling back nicely on this pop here. So I do expect some strength going into the close, and we'll have to see what happens there. Thanks for being a part of SwingHigh.com, and I'll talk to you tomorrow.